we'll start with ES. We'll go through all the indices.
KP, how is Palantir doing? I mean, if you
Which one is it?
Palantir.
Palantir? PLTR.
Yeah, PLTR.
Well, I mean, anything that's hitting, that's near the 52-week lows are, it's not doing good. Yeah. Yeah, let's start with the ES. So everybody's wondering what happened so far. Say, there are the only good thing for tomorrow and probably for the rest of the week is that we have a Fed meeting, Fed, day on Wednesday. So tomorrow, either we may just move sideways, but there is a good possibility in the next 1 or 2 weeks, this low will be tested. That happens all the time. If that's broken, it's going much lower. It's that simple.
So you're saying it will test 414, 4147?
Yeah, today's low. Today's
low.
Yeah,
okay.
That's the first level it will test at the least, unless Fed does something they haven't told us yet. So I mean, Fed is always a wild card right now. But other than that, if they follow whatever they said, the market would probably test this low. If that's broken, it's moving much lower. One thing I know for a fact is that when you have this kind of move in a single month without any kind of bounce, that's a very, very big bearish sign. Okay, so we should always be cautious when there are no bounces. I mean, here we had bounces every time, and now everything is changed now. I mean, with the price action is so bearish. The only reason I would think today it bounced is because it opened lower. Let's look at just the RTH, regular trading hours. So it opened here, went all the way here. It broke the. I thought it would stop here, but it did not. It went down lower, and it came back and see where it ended up. Right at the trend line. There is a possibility that it could go all the way here. That's the first major level that's broken. So it could go all the way there, but if it cannot, that's more bearish. So always think in terms of how far it is supposed to go and what it did. If it is supposed to go, did it go there, or did it had a hard time to even? I mean, this could go all the way here and come back, test the 200-day and come back, or it could go here. But if it breaks above the 4,500 level, it means that's probably the best case scenario. Breaking 4,500 is the best case scenario, and this could be it. Okay. The most bullish is above this level. The next one would be testing 4,500 and moving lower. The worst case could be tomorrow it goes down. I mean, I have seen this happen a few times, not many times, but a few times. It could retrace back entire thing and start moving lower. That shows the amount of selling that is about to come into the market. That's regarding ES. Any questions in ES? All right, let me go to the NASDAQ.
I have one question, KP.
Yep.
If you see the retracement, I know it has been falling from past so many days, like 6-7 days.
Yep.
But usually, what is the retracement like? Is it better than before, or this one-day move that we got? Okay, can we do some retracement?
Yeah, actually, that's a good topic to talk about. So let's assume this is the low. Let's get to that. So talking about retracements. So that's it's right at 38% retracement. So if it goes to 38 and moves lower, it's going much lower. Actually, you know what? This is probably an easier way. We can figure out where it's going. Let me do the exact numbers. 4808. Let's do that. 42, all right. So this is, I mean, it has worked for me in the past. It may or may not work now, but generally if it only goes to the, this is a 38% retracement from here to here. This, if it breaks here, it could come all the way here. Okay. And if it goes to 50%, then we might just test this level. This is something that I've seen many times. And if it goes to 61% retracement, we may not even come all the way here. We could probably have a higher low and then probably move higher. And again, that's the best case scenario. So yeah, the retracements are these three for now. We'll see where it goes. The lower the retracement, the lower it's gonna go. That's all we need to remember.
Can you share the screenshot, please?
Yep.
In the webinar channel.
Yep. I'll share it. So that's ES. Yeah, this is much. One of the things that I did not like today, even though we had such a big move higher, is how much of today's retracement recovered yesterday's move lower. Not much. It barely did. That's not what we want to see. Which, if this move would have went all the way to yesterday's high, that would have been very encouraging. So far, this is not a lot of, again, it's just one day. The Nasdaq went down almost 5%. So yeah, in a single day, moving all the way to the top of yesterday's high is hard. But if this does not continue tomorrow, that's bearish. Again, in a way, it just came to this 14,400 level. So if it breaks this below this whole supply, it is still, they are still ready to sell. Whoever did not sell in this range, they are all ready to sell. So we had I think the Nasdaq had almost, let me check. Nasdaq had almost 15% correction today, or is it 12%? These numbers are important because everybody is watching. So yeah, Nasdaq is down 12% so far for the year. So I think it was around 14 or 15 today. Yeah, it was down 15%, 5%, right? Yeah, it was more than 15%. So these numbers, today, IWM, it tested 20%. It went to 20% lows, not from January, but from November highs. We'll go through that again. So, I mean, it's not encouraging yet. If it goes higher, you have this 200-day, then you have this 15,404. Actually, not even that. That's not very important, I think. This is probably an important level because we bounced off of this level. This is important level, and this is probably the most important level because you have a lot of supply coming in. And one of the reasons this went down so much is because of all the supply. So far, ES and NQ did, even though they bounced a lot, it did not retrace enough for us to, even think that this is bullish yet. Russell, I mean, from here to here, it was a 20% correction. So that's already in a, well, maybe not anymore, but it was in the bear market for a small amount of time today. And again, possible test of, if the market is really strong, it will probably test that 2100 level. Once you get used to using the levels and nothing else, believe me, the trading will become so much easier to, make decisions, not understand. I mean, we'll never understand why something is happening, but it will be easier to make decision whether to get in or not. But anyway, 2100 is probably the level if the market is moving higher.
Hey, KP, when you share this NQ and Russell chart, right? Would you mind, can you also capture your settings on the top, please?
These?
Yeah, the settings, those daily simple moving, those ones.
Oh, actually, I can. Let's. All right, I'll do that. Sure.
So that way, when we are setting up, we can also use some parameters like that. Thank you.
Yeah. Hold on. Let me take a picture. So 1 year chart. Today I wanted to talk about something I might be doing the thing is, the moves are so big and I am waiting for my options to work. I don't think we need to wait for such a long time or wait for the swing moves at all. So today I'm going to talk about something. This is something that I've seen in a few charts today, and we will talk about that. Just remind me if I forget where I'm going to buy and how to do the short-term trades. I'll put it down here. So we are done with that, and what else? Let's look at. Let's look at Microsoft. I'm going to go through the the mega caps and see where we are, because they have been keeping S&P and Nasdaq on the top. So yeah, Microsoft broke this October lows, but came back. This looks much similar to Nasdaq 100. So again, the 280 level is the key. If it breaks at 280 level, that would be back. I think we have earnings this week, right? No, I'm not sure.
Earnings tomorrow.
For Microsoft?
Yes.
Oh, for me, it's not showing. Okay. Yeah. So
tomorrow?
Then that could set the tone. Yeah. 25th. Yeah. So that could set the tone for the entire market. If they screw up, it's going to be a bad market, because the only thing that can keep it right now is this earnings. It looks like there are a lot of companies earnings are this week. I think like 200 or 300 companies, I think. Microsoft, let's see, Apple. Apple still looks good. Apple looks very good. That's the October lows. Yeah, it is so far away. So yeah, Apple still looks good.
KB, based on today's close, do you expect, like, maybe not do you expect, like if and no, if and else scenarios?
Yep.
If the market opens strong tomorrow,
It's not
So
about
what-
where it opens, where it closes is important. Yep, go ahead.
so very close. So okay. So even if the market opens strong tomorrow, it does not matter if unless it closes above positive, right? Or higher, higher than today.
So what I was saying is it should capture this day at least. So one of the best thing that could happen is break this 44.92 level. That's the most bullish scenario, but I really doubt it's going to happen. But this could be tested. It is not very far. This could be tested. We'll also know how the overnight action is going to be. See, some part of this has to be tested today. So it might open lower and then move higher. We'll see how it opens tomorrow in the morning, but how it closes is probably the most important thing. And and ES is right at the 200-day moving average. So let's see. And also we have this trend line. And whenever you test the back of a trend line, that's a resistance. And while it's coming down, this is support. And when it's moving from the bottom, that's a resistance. So let's go back to Apple. Well, I mean, Apple is good. Apple is probably one of the strongest ones. So if these strong ones are in any bear market, right? These strong ones are the ones that are gonna go down last. So when is that? Oh, we have earnings for this one too, this week. So we're gonna know where the market is gonna go this week. What else we have? Google. Google doesn't look good. It's already below the, October lows. We have, it hasn't been doing good for a while, so there's no point in even considering this as a strong stock. Nvidia, I'm just looking at the ones that are, really big. Yeah, this will probably have a decent move to 256. I mean, I thought we would get a move higher from here. It did not. I did not expect this to be broken. I mean, that's how bearish the market is. Generally, if it wasn't that bearish, we could have got a up move from right here. And the stocks are not moving with their own credibility anymore. They are just moving with the market. So whenever the market is bad, everything else is moving down. So individual stocks, now, I mean, whenever we trade, we have to look at how the market is doing. And based on that, we have to put our trade, whether it's a bullish trade or a bearish trade, until there is a disconnection between the stocks and the market. What else we have? I guess that's we went to Tesla. I mean, Tesla is still looking good. I mean, it's still in a breaking this low, was in a downturn, but it closed higher. So I think this is still looking okay. I guess that's all the stocks I have. Let me know if you want me to look at anything else. I'll go through the sectors now. XLK, well, testing the 200-day, same as QQQ, I guess, and ES. That XLK is mostly Microsoft and Apple. So healthcare, yeah, below anything below 200-day is obviously is not in a good shape. XLY, XLC, this is horrible. XLF looks okay. Not good. See, only the XLP, which is staples, and probably XLU are near their 50-day. Everything else is below the 200-day. I mean, I know one of the questions that one of you were asking me was whether it's a good time to buy. It's not, because nothing good happens below the 200-day moving average. Nothing. XLE is actually looking really, really good. I was going through some of the charts, and these are the charts that look really good right now. And most of them are either energy or financials or insurance. That's it. And today, builders did really well. That's an amazing move for builders. And from the open, it's a 5.73%. That's a big move. So this is something we can look at. I mean, if you go bullish, or if you want to buy calls or go long the strongest. This might be, if we see a bullish day tomorrow, this might be something that we can. Home builders is something that we can look at. And also there was some takeover rumors for Kohl's. That's one of the reasons XRT did really well today. And Macy's did okay, DDS, they all, I mean, all the retail did well because of somebody wanted to take Kohl's private, I think. This stock, I have a traded price and I did not make any money on it, but this is the Trump stock. This one looks really, really good. And I have no clue why, but chart says something is happening here. I don't know if Trump is gonna, win the primary again next year, in 24. I don't know what the story is, but this one looks really good. One to keep on your watch list, maybe on the top. See, certain stocks, they don't care where the markets are. Actually, I wrote a couple of stocks here. KPTI. I think this is another, look at that. I mean, this year, this has only went up. I mean, I don't think I'm going to trade this, but I wanted to show you what kind of stocks we should be looking at. The stocks that are showing relative strength this year. That's all we should be looking at. And MGI, MoneyGram, I have no clue what's happening here, but yeah, this one is very, has a lot of relative strength. But again, going back to BWAC, this is something I want to keep track of. Again, this will probably be a swing trade, or even a short-term trade. But this one looks good. And I'm gonna post all these charts or tickers in the. You guys check it out. These are all looking good. I can go through a couple of them. This one I think is a recent IPO. This one looks good. This is transport, but this one looks really, really good. Again, I'm only gonna get back into these stocks if there is strength in the market, or else I'm not. Yeah, the weekly chart for this one is really good. This is oil, and this is oil and gas. I think that could be why. Oil and gas is there are plenty of stocks that are looking good in oil and gas. Devon is one of them that I shared with today. Now that's a huge buying pressure. And if you look at this chart, you wouldn't believe that we are going through a correction at all. Those are the kinds of charts we need to find during this period. Our job is to do the research, figure out the charts, figure out charts like this, and whenever the correction is over, get into this one, stocks like this, and they'll probably double or triple when the correction after the correction is over. These will probably break out before the market bottoms. That's a higher probability.
Quick question, right?
Is this energy D1?
Yep, Devon Energy. Yep.
If they are going to be the leaders, why can't we buy now? Why wait until they go up?
No, I mean, if it breaks out, you can buy. but I don't know if it's going to break out. And the thing is, you need to find the ones that have their most relative strength, right? So
Right. I mean, so far, like, in this last 1 or 2 weeks down market, right? I think
Yep.
BVN close
yep, this is
strong.
Yes, that's right. That's right. This
we
is
can-
probably the only one that you could buy if you want. Right?
Okay. And
So-
without waiting for it to break out.
No, I'm going to wait for it to break out.
Oh, wait for the breakout.
So
Okay.
yeah, because we need to see new buyers coming in when it's hitting new highs.
Okay.
That's when we know for a fact that there is a buying pressure. And we want that buying pressure. I mean, it has to move higher after we buy, right? So we need to see that buying pressure before we get in. And then the ideal scenario would be that, it would probably, move and make a cup and probably a handle. Handle is even better, or cup and a breakout.
And how is CFLT now? Again,
No, look at all that supplies. It's hard. I mean, it's not just this one. Any growth stock, many of the growth stocks are this way. I mean, I got this alert this morning for CFLT. It opened here, went down, tested this low, and it came back. So again, if it makes another, rounded cup and a breakout, that's when I'm gonna buy.
yeah.
Until
So
then-
now, like, I mean, because now it's closed above 57.99. Do you think
Yep.
it would go up to 69, the next level, or?
I mean, well, the thing is, as soon as it gets into this range, you have a lot of people who have bought right here.
Right.
So
Okay, they would-
all the people who bought right here, as soon as it gets into that range, they are going to sell,
Okay.
break even.
Right.
So
KP, the DVN, right? How is it doing when it compared to, is it performing alongside same as parallel to that XLE, that energy sector ETF?
yes, it is. It is actually, Devon Energy is a leader, so it's actually doing better than XLE. So look at that. XLE broke out on Jan 5th. It actually broke out on the same day. It was doing great right here. It broke out before any other stock in September. I did trade a little bit here. I should have, again, I don't have a lot of experience trading energy stocks, but looks like this is something I need to get used to.
But is it just because of the energy energy sector pump we are getting it? Because
That's probably true. I mean, even ExxonMobil, this is amazing. I mean, there is no correction in ExxonMobil. So all these stocks, Halliburton, look at that. This doesn't look like, we are in any correction at all. So, yeah. But the thing is, we want the market at least to move sideways for us to get into this. If the market keeps moving lower, getting into these, it's easier to find something to short than to go long in these sectors. That's how I think about it. This one also looks okay. EOG is another energy stock. See, I mean, they moved a lot and they came back and testing the 20-day moving average and then moving higher. Same with XLE. So most of the stocks are probably the same way. This one is interesting. This is a defense, UK defense company. So this is something to look into too. I mean, if we want to go along, we have to pick and choose, because there are only a few stocks that are doing better. And there is a reason for them to do better, because that's the only place maybe everybody else wants to get into too. You see what I mean? And tobacco, this is another one. This is just moving higher. This is what I do every day. Create an alert all the time. And this alert, I might get this alert probably, 6 months from now. Doesn't matter. I cannot track all these companies every day. So these alerts help me a lot. ACGL. This looks like a pullback buy. I mean, this one actually as a chart looks really, really good. It broke out of this level. Okay. This is something that I want to do in the intraday charts too. And looks like this one might work well if we want to do really short-term trades on a day trades. So yeah, anyway, it broke out of this level, came back, tested, and moving higher again. So this is a good one to keep an eye on. And when I say pullback buy, we'll probably be buying above this level. I'm not buying tomorrow. I'm saying when I say pullback buy, that's what I mean. So it pulled back, but again, it made a higher high, or 2-day or 3-day high. And this might happen tomorrow.
KP, that chart right up top, right there, where you had red candle, right, the last red candle and the green candle right next to it, right?
Yep.
When it dropped from red to 47.86, right? But we don't see a red candle there. What does that mean?
Oh, this is not red. Well, red candle. Okay, you will get a green candle whenever it opens, whenever the close is above the open. That's it. It opened here, it closed here. That's it. That's the only reason it's green.
Okay.
What else we
No,
have?
the line at the bottom, right? See, when it closed the previous day on the bottom of the red candle, so you're saying the next day it opened directly up from
It
there?
opened here.
Or from,
No, it opened here, went down,
okay.
and then closed higher. Let's look at it.
Okay. Okay.
See, it opened here, went down, then it went up. So because it closed above this level, it's green.
Okay. Okay.
All right. Yeah, so today, I have been observing this for a while, and probably this might work well in the long run. So whenever this is a cup, see, this is a cup and this is a handle, right? So you could always go ahead and buy above this level, and this will be your stop, or this could be your stop. It's up to you. And for me, this 20-day moving average is also helping on the 5 minutes. So so this is something that I'm looking at. Whenever I see a cup and a handle and a breakout, you get in. So
This is 5-minute chart, right, KP?
yes.
Okay.
This is what you would do on a daily chart.
Okay,
So
daily
I'm
chart.
using the
Okay,
same
this
thing
for
on a
short
5
term.
Yep. And today with Tesla, you could probably do something similar, but that's a cup and a handle. But when it broke this level, you can probably go long above this level. I think that I'm going to do a few of them, in the next few days and weeks, and see how it works out. Generally charts are timeless, but I've never used it in intraday. But I have been observing this pattern, and this pattern works all the time. This is also, supply and demand. Above this level today, on this day, right? There is not a lot of supply. So when it breaks this level, generally it moves higher. Also, this gap helps because there is no supply right here. So moving to that 944 is probably a really fast move from 910 to 940. That's $30. That's almost 3.5% move. What else did I see? Crowd, did I? Okay. NVIDIA was a similar one today. Well, again, this is the same chart that happened in QQQ. That's how I bought QQQ today, when it was making this cup and about to break out. That's when I bought it. So everything, all the charts are looking the same way today, but this is something that we can trade on a regular basis. And these trend lines always help. Broke out, came back, tested the trend line, moved higher. And this would be your stop. Well, the moves are so big right now, I guess, even the short-term trades should give us, 2, 3, 4% moves. So why not capture it? All right. I guess that's it. That's all I have for you guys. Let me know the questions that you have.
KP, this is Yatin.
Yep.
Just want, I don't know if you already explained earlier in our webinar. I wanted to know how to find the higher high and higher low, those 4 parameters.
Okay. Yep.
Trend and downtrend.
All right. So always, if you look at this chart, right? That's a low and that's a high. Okay. And it went up, came back, and you have a swing. So now that's your higher low. This is your low, that's a higher low. This is your high, this is a higher high. Okay, next, went up, it did not break this low. Okay, made another low and started moving higher. So that's your higher low again. And this is your higher high. So these are all, this is your first high, higher high, higher high. And the same way, this is another higher high. And this is another higher high. Higher low. Yeah, this is probably another higher low. And this one is a lower low when compared to this one. It means trend is changing now. Now this is a higher high and this is a lower high. That means now this is in a downtrend. You got a lower high and a lower low. Now this is in a downtrend. That's exactly what I was saying. But again, for Tesla,
my question is more maybe basic. Why do we say that as a higher high? Means in what way you say that is a higher high or higher low?
A swing low and a swing high. I mean, you can always figure out which one is a swing high and a swing low.
I think it's related to previous high and low.
That's it. That's all it is. For this one, this is the previous high, this is the previous low. Previous high and previous low. That's it.
Oh, okay. So when the last time whatever previous high happened, if it is again a new high, then higher high.
That's
and
it.
if it is low, all right. Oh, I got it. I was thinking it is based on the candles, that the line. That's what I was getting confused.
No, it's not.
Okay.
Well, I mean, these lines were drawn because it was a swing high or a swing low.
No, not in that one. When the green candle is there is a bar, right? Sometimes that bar, the line is bigger line and sometimes smaller.
Okay. I know what you mean. No.
Yeah.
I mean, it has everything to do with whether it is a swing high or a swing low.
Okay.
And did the character of the chart change at that point or not? So it does.
Okay. So since now I'm asking you basic question again, I would ask you one more in the same way I was asking you, right? So when this candle, right, you see that some of the time that the candle is very big, like a green candle is very big, but then the bar on top of that is very small. Is there some sign to consider in that case? Or sometimes candle is very small, but the bar is very, very, very big.
Oh, okay. You mean
that line. Yeah.
The tail or wick.
Yeah, tail or head. Yeah.
Wick. This is called a wick and this is the body. So, well, let's look at this one today, right? When you have, this is a hammer because you don't have a wick on the top. This is a hammer. So it means that it went down, it opened here, went down, and then it went higher, much higher than the open. It means that when it came down, you got a lot of buyers. Let's move it to a 5-minute chart. These are all sellers. Then they couldn't find any sellers here anymore. Okay. Now you got some buyers and the buying pressure increased. So that's how you know that in the morning session, the sellers were dominating it, and in the evening session or the afternoon session, the buyers were dominating it. it means that's a change in the character, or the sellers are going down and the buyers are getting in. So that's why anytime we look at the hammer, anytime we see a hammer, it means that could be the end of the selling. It could be. Again,
Oh, okay.
you need a follow through, obviously. You need a
Yes.
follow. If you have a follow through, yeah, that's the end. That's the end of the selling.
Yeah, right. I think you are asking like, why the shape is like that or what?
No.
No.
Means the point head or tail. Like sometimes the tail is
Yeah.
very. Sometimes
Oh,
head is
yeah. I mean, that is basically the lower part of the body is the open and the higher
Yes.
part of the body is closed.
Oh,
And then
okay.
the low part of the tail that's the lowest point that day, and the top was the highest point that day.
If it's
Oh.
if it's a red candles, it opens here, it closes here. If it's a
Okay.
green candle, it opens lower, closes
Opposite.
higher.
Okay.
The body tells everything.
Oh, okay. I
And the
got it.
wicks are like, what is the lowest point and highest point in the day?
That's it.
Okay. I got it.
I thought that's what you're asking, right?
Yeah. Exactly. Thank you.
Okay.
Then you should go to stockcharts.com and look at the candles.
Oh, okay. Sure.
Yeah. They have something called chart school. It's
Okay.
free, and then that's where I started understanding
Oh.
what a candle is and everything.
Yeah. Okay. You said stockcharts.com, right?
Yep.
Okay. All right. Fine. I will look at it. Thank you, KP. Thank you.
We are talking about stock charts. I wanted to talk. Any questions that you guys have? I can talk about the. What is that?
So another question, right, KP? Like with
Yeah.
the semis still not recovering, right? Do you think the market will go up without semis, like ASMLs and NVIDIAs of the world?
No, no. Are you asking if the market recover without the
Yeah,
semis?
can market go up without semis support?
I don't think so. Well, again, it's okay. Semis are literally a commodity right now for the economy. Okay, without a semiconductor, it's hard to do anything these days. So it's like the world can't move without gas. Semis are the same way.
Yeah. I mean, that raises another question, right? So now this week we are having more tech earnings, right? Like be it Apple, Microsoft, and all, right? Tesla.
Yep.
But actually, on the other side, semis went down hard, right? Like NVIDIA and ASML, all of them are down like 20%, 30%, like from their highs.
Yep.
Compared to other tech stocks.
Yep.
Right.
Yep.
So now if tech stocks post good earnings this week, but semis are still down, right? And
No,
generally
it doesn't work that way. If the tech stocks give good earnings, again, giving good earnings and react and having a good reaction are two different things.
Right.
Let's assume we have a good reaction after the tech earnings and the tech stock starts to move higher. And there is a very high probability that semis will follow them.
Okay.
Yeah. See, economy goes, together. Okay. And if Microsoft or, Apple, if those companies are doing good, and for even for Microsoft, right? Semis are the suppliers for all their products other than software, all their hardware and everything. They are the one supplying all the products. So if they do, if the mega cap gives good results, if they go up, semis will go up with them.
Okay.
I mean, think about this. TSM is the biggest supplier for Taiwan Semiconductor, is the biggest supplier for Apple, and NXPI, Apple. Who else? Skyworks, Apple. They all depend on Apple. So if Apple goes up, all of these will move higher with it.
Okay.
All right. Let me go talk about these charts. So I was looking at these. I posted in the Slack channel. These are the charts that I posted. So in the last 2 weeks, I had so many calls with so many people about where we are going. So I started doing some research, and this is, I don't know how much you guys understood about the explanation that I did, but this is NASDAQ composite, okay? And sorry, NASDAQ composite, and that's a 5-year moving average. So that's the 5-year average price, okay? And if you look at that, I always was, I read about 87 crash many times, but anytime the price goes much farther away from this 5-year moving average, it came back and it tested. It happened here, here. I'm not sure about here. Again, here. This is way too extended. Whenever you have a lot of FOMO, you'll also have a lot of panic. That's FOMO, this is panic. So again, tested here, tested, failed, came out, tested, again tested. I mean, this has been tested so many times. If you look at the number of times it is tested, this will be tested probably in the next 1 or 2 years. Or this could happen now. So if that's the case, again, grain of salt. We don't know if this is going to happen. We are going to follow the markets every day, and we are going to figure out if it's going to happen or not. And this could take months. So nothing to worry about, but this is a very, very, very big picture. So if you look at this chart, we are way, way away from this moving average. So we are almost 30% away, actually more than 30% away from the moving average. We were at 16,000 and the 5-year moving, this is at 10,000. So that's about 50, 55% or at least 60% away. So in ideal conditions, this should come back and test. In worst conditions, it would go below this.
And how long it took, like the lowest point, 6,631 to 16,000, like 10,000 point, right? If
how long it could take? It could take months or
no. In this case, right? In this chart, it just took less than 2 years, right? From 6,631 to 16,000.
Yes, yes,
almost 10,000 points.
Yeah. This is, see, I mean, when you look at this looks almost like a move until here, maybe not until here, but probably a move until here. Okay, so this is, and I mean, I know for a fact that, and again, think about this. This is not regular chart. This is an exponential chart. Okay, look at that. 400, 500, 600. They are right next to each other, right? So you may not see how much move it has happened because this is a log chart. Okay, again, so worst case scenario is this could come back and test that. Maybe this will move to 11,000 or whatever, but even that's over 30% correction. So something to keep in the back of the mind. And again, I know that a lot of people became rich in the last 3 years. We are seeing that in our own lives. And the other statistic I was reading a week ago was that 48% of all the money is in the stock market, of all the assets in United States is in the stock market, which is the highest ever. It means that everybody is in the market. So these are not something that we should take lightly. But again, we don't have to react based on that. We react based on how the price action is. But something to keep in mind. And we'll probably keep track of this one on a regular basis. That's the NASDAQ composite. And I mean, if you think about it, 16,000 to 13, that looks like a very small candle right here. So long way to go if we are going into a big correction. That's SPX, much similar, tested here, broke here again. So again, this is so far away again. 3,300, 4,300. That's almost 30%. That's NASDAQ. 6,000 to 16. What was that? Huh. NASDAQ composite and NDX looks this. How come they have the same numbers?
Isn't NDX is NASDAQ?
No, NASDAQ 100.
Oh,
NASDAQ
okay.
composite is all the
25
2,500 stocks. This is only 100 stocks. Anyway, so
This is MarketSmith at the KP, or where are you
no,
looking?
this is from stockcharts.com. If you guys want, I can send you a link for this. Did I send a link for this one? Let me see.
It is free, or we need to have?
It is free. It is free, but you'll probably get ads. But yeah, it is free. Permalink, copy link. I'm gonna just drop it here. You can just change the ticker, and you should be good. So yeah, that's what I was looking over the weekend, and yeah, it kind of scared me a little how much it could go down. So I am not in a rush to buy anything right now until the stock set up. So that's where I am. All right. Let me know if you have any questions.
Does it
Can we
make
look
sense
at?
to- Yeah,
Yep.
go ahead.
Yep.
No, go ahead, please. Please go ahead.
No, this question was like, does it make sense to buy a long puts?
Well, again, the problem with buying puts, well, it's not a problem, but the thing is, generally I buy puts when something breaks down. This morning, I got this alert for CFLD, and I've been watching CFLD for a while. Okay, but it opened, so far down. So if this is recovered, this move, you could probably lose 50% of your value. So what I'm saying is, you buy puts when the break happens, and that's probably the best time. So I mean, today I had that experience, right?
Yeah, I mean,
This broke. I got
Yeah.
it. Then it started moving higher.
Yeah, unless if you get an alert and act on immediately, right? By the time you realize the premiums
Yeah.
start up like crazy.
Yeah, I mean, if I was there, I would have lost all the money today. So again, market is very complicated, and especially when you are talking about options, it's even more complicated. So the best thing to do is find the low risk place and buy it. So okay, let's see. When I say a low risk, let me think. Yeah, SC was one.
Okay. Canva, even if the market jumps a little bit, Canva is like going up very fast.
Yeah, I mean, it went up 4%. Yes, true. You're right. True. I mean, it went up really fast.
Which one is that?
The Palo Alto Networks.
Oh,
Palo Alto. This one.
Okay.
But again, this is the reason I got into this one is because when the entire market is breaking down, okay, if this is the last one to break down, then this move from here to here would probably happen really fast. And from here to here also, it will probably happen really fast. But the only problem is we have been having the sell-off for over a week now. So I knew that if things are not gonna work, this is gonna snap back really fast. Okay, let's talk about this one. The best case to buy puts is right here. So if you look at this, you have resistance here, went over there, tested, failed, came down, moved a couple of days, then it broke. This is actually, we used to use this Bollinger Band squeeze. Okay,
Right.
so when the price squeezes, okay, it doesn't matter whether it goes up or down, the move is going to be fast. So when it breaks, the move happens really fast. So even though it doesn't look like a lot here, what was that, 166 to 132? That's $34
That's a
move.
big move. Actually,
Very
that's a
big
big move.
In the chart, it doesn't feel that way, but that's a very big move. So this is the best place to buy. I mean, buy puts. So this is why we should have all these alerts, and I generally have an alert right here.
But KP, when you set the alert, right? How
Yeah.
do you set that alert if the price has not reached based on 61.8 retracement?
No. Actually, it was not. I was just looking at the fibs for a long term. I'm going to explain in a minute. But the thing is, I am this price is what I'm concerned about. So where was the support? Okay, the support was it bounced off of here, and you have 2 more touches here. So you have 3 touches, and this is a inverted hammer again. That doesn't matter. It doesn't matter what kind of hammer that is or what kind of candle. When it breaks, that's when you get in. And talking about the fibs, so they see from lows to highs. Okay, lows is at 38. That's the low of 2020. So for this entire move, that's the 61% retracement. That's, if that is being broken, it means this could go all the way down to, if this correction gets worse, this could go all the way down to 52. I mean, all this move can be retraced. And I've seen this happen many times. And I'm not talking about some low market cap stocks. I've seen that happen to Nvidia. It's retracing the whole move. I think that was in 17. So I mean, these retracements happen all the time. Look at that. I'm getting somebody's using their tablet, I think. Right. So look at that. So it broke out here, moved from, what is that, 30 to, I think this is pre-spec, but it more than doubled, and it came back all the way. So I mean, this can happen to any stock. And Nvidia is like the best of the best companies. That's why I keep buying puts for this, because all those guys, they are going to give up. And I have all these levels, of course, and each level is like 15-20 bucks away from each other. So even if I get from here to here, you can probably double or triple your option.
Today it went up, right? Towards the end of the day.
Yeah. Well, I mean, it wasn't positive, but yeah. It will probably come back and test this level again.
So do you think if it tests 166 again, and then if it has facing pressure moving up, we can buy puts at the time?
No, I mean, if it goes there and fails, like it failed here, if it comes here and fails and moves back, that's when you buy.
So okay, so for confirmation, we have to wait until it moves back a little bit, right? Until 135, 153.
One of the easiest way is to, right here, it went up there, right? Below the low of this day, what is that? 195.66. Below the 196, 195.66, you will probably buy a put right there. So if it comes back here, tests here, stays there for a day, the next day, if it makes a, the next day, if it breaks the low of that day, you go ahead and buy puts. At the least, you will probably get a move from whatever that 160 to 134. But this
Okay.
is in a
Okay.
deep downtrend. I mean, look at that. It's going straight up. I mean, the 50 is not even able to catch up. Again, for all of these stocks, the most important thing is that we watch the market, because if the market bounces, these will bounce really fast. That's one problem with shorting, is that when the short covering starts, everything will happen really fast. When it does, we have to get out. That's why buy at the right price. If you're wrong, you can get out right away. You don't have to wait for a 50% correction of the option.
KP, can you share this chart, please? And also after this, can we look at ASAN?
All right, Asana. All right. I haven't seen this in a while, but yeah, it looks the same. It will probably test at 56, but actually today's candle, see, when you compare it with SC, today's candle is much bigger, which means that if we have a follow through, we'll probably go all the way there. Or probably, let's see, what is that?
Yeah, I have some ASAN. Average price is 64. I'm just thinking, when should I get out now or wait for the bounce tomorrow and then probably lower the loss if it has trouble crossing 63.
Well, that's a hard question. So when you bought, did you not have a stop loss?
I have a stop loss below 50, but in the sense like I
always have a stop loss for not more than 8%. That's probably, I mean, that's one of the reasons why we have to be careful when we get in. But anyway, right now, if it tests this level or this level, I will probably get out. I mean, let's see how it does tomorrow.
okay.
Oh, well, I mean, if it broke today, your 50 stop loss broke today, right?
No, well, I didn't set it up today until it went up. But I said after it went up, I set it up because I had a little bit, so I averaged a little bit, and now after that I set up the stop loss. It didn't hit after that.
Believe me, for many years, I did not have stop losses. But since I started using stop losses, my life has become so much easier. And every time a stop loss is triggered, I feel bad. Even now, because I lost money like everybody else. I am not happy about it. But the thing is, that is going to help me not, go through a correction like this. And nobody knows when this correction starts. So if you have without stop loss, don't get in. And once you have a stop loss is triggered, get rid of it and go find the next best thing. And believe me, your trading will totally change.
Yeah, but KP, how does that stop loss work in all scenarios? It's very possible that we might be 50% incorrect right now. This is like a stock bear market, which just makes sense. But if it were a regular bullish market or maybe sideways market, stock might take a little bit of time to go up, right? It might like pull back a little bit, but then it will go higher up later. So if a stop loss triggers at the time, it's just taking a back step only to go higher up, then we would be a total loss, right? I mean, not total loss. We'll still be that would be a bad stop loss, right?
Well, the thing is, let's assume let's talk about what your scenario. So let's say you bought it here, expecting it to go up. It came down, okay, and let's assume that it's going to make a base here and starts moving higher. With your scenario. But in this case, you don't know how long it's going to take for it to move back higher. If that takes 2-3 months, you can probably find a better stock that will move higher after breaking out. Okay. Again, the reason to have that stop loss is because we don't know when the bear market is going to start. And the bear market doesn't need to start for the entire market. It could just be for that stock. I mean,
Okay.
you are trying to, once you start reducing or cutting your losses and sticking with your, the stocks that are doing good, believe me, everything will change. Your portfolio will totally change. And it is, I mean, stock market is not like investing in, a lot of us, do real estate investing. Okay. In real estate investing, you never sell anything for a loss. That's how most of the people are aligned, because they don't have a lot of experience with stock market. And we expect not to sell for a loss. But once you prepare that I don't want to lose more than 8%, believe me, you're going to be much better. And the second thing is, if you lose 8% on this stock, you only need to make 8.1 or 8.2% to make up that loss. If this goes down 25%, you have to make 33%. Let's say if this goes 50%, you took a loss. Then you have to find a stock that doubles to make up just that loss, which is hard. It's easier to get out when you're wrong and find the next best thing. And the other thing is, if you are wrong 5-6 trades in a series, you should reduce your positions. Should do smaller, okay, until the market is right for your strategy. That's how I got, I was able to get out of the market even in after October, right? Even in November, after November, even when the S&P was going higher, I couldn't find any setups. I couldn't find anything that's breaking out. I was feeling bad that I couldn't find anything. The reason this was going higher is because of what? I know that this is because of staples, no other reason. Okay, staples were doing good, energy was doing good, utilities were doing good. That's why SPY was going higher, but I don't trade any of those. But the thing is, if nothing is setting up, if nothing is breaking out, the best thing for me to do is, sit down, do the small trades. I mean, I know this happened. This might have happened by chance, or this is something that would have happened no matter what. I don't want to be part of this. My goal is not to be part of this. If I am not part of this, I'm saving a lot of money. And whenever this correction is over, I can probably double my money. And that's exactly what happened for me in 2020. Going into this, I did not have a lot. I lost about 18% during the first few weeks. Okay. But I got out. And when it came back, I made like 85% during this move. So think about that. And we will never know how deep the correction is going to be. The reason we have to honor the stops is because for us not to get into this kind of moves. And these are indices. I mean, these are not looking so bad, but the stocks that we have owned for last few years, they are horrible. Other than the mega caps, everything else looks really horrible right now.
And the stop loss strategy, KP, what you're suggesting, it's replicable for both long term or short term, or it's only for short term trades?
See, the only difference there should be is for let's say let's take
So I'll give you an example. I want to hold a stock for 6 months, buy and get out.
No,
like
I mean,
probably in a
you should never decide how long you're going to hold. You should decide based on how much loss you're going to take. That's it. So, for example, let's say this is a stock you wanted to buy. Okay, you're buying on this breakout or wherever you're buying. Okay, so you can either have a stop loss here, which is supposed to be a support, or here. If you have a short-term time frame, this will be your stop loss. If you have a long-term time frame, this will be your stop loss. So this will be on a daily, and this will probably be more important on a weekly. Okay, this is probably, but you should always have a stop loss. Because things, okay, the stat is that in a bear market, 80% of the stocks can go down 50% or more, 80%. So you don't want to hold anything in the bear market. And 50% of the stocks could go down 80%. And now we are seeing that. We are seeing stocks go down at 80%. And numbers speak for itself. And I think I've shared this a few times. What is that? This one, the 200-day moving average, the number of stocks that are above the 200-day moving average, even here, there were only 30% or 35% of the stocks, while NASDAQ composite was making a new high, only 35% were in an uptrend. That tells you that NASDAQ composite is not really telling you the whole story. A lot of stocks is getting hammered. And I think I do have this one too. What is that? Look at that. When it goes down, it could go all the way down to 10, 10, 10, 10, 10, lower than 10. So there will be only 10% of the stocks that's going to be in an uptrend. It's not even an uptrend. It's a 200-day moving average. So that's almost a 1 year average price. So, things could get worse. Even if you look at this one, if this goes to 10, that could take a while for it to go to 10. Right now, 18% of the stocks, 18% of 2,500, how much is that? That's 500 stocks. $450 stocks. So 450 stocks are still about their 200-day moving average. So when you listen to these kinds of stats, it does feel like, unless it's working, it's a shitty stock. Okay. Again, these are the things I'm learning because I'm reading so many books in the last 2 or 3 years, and they have all I see is stats. And then when you read these stats, nothing looks important. You cannot be a big fan of Tesla or Nvidia or no other stock. When something is not working, you will get out because you have to survive a big crash. All right, I'm going to stop the recording.